Ladies and gentlemen, thank you for standing by. Welcome to the Tel Aviv Stock Exchange Q1 2020 Results Conference Call. All participants are present in a listen-only mode. Following management's presentation, instructions will be given for the question and answer session. For operator assistance during the conference, please press *0. As a reminder, this conference is being recorded May 26, 2020. The recording will be publicly available on TASE's website. With us online today are Mr. Itai Ben-Zeev, CEO, and Mr. Yehuda van de Walde, CFO. Before I turn the call over to Mr. Itai Ben-Zeev, I would like to remind everyone that this conference is not a substitute for reviewing the company's quarterly and annual financial statements and interim report for the first quarter of 2020, in which full and precise information is presented. In addition to IFRS reporting, we might mention certain financial measures that do not conform to generally accepted accounting principles. Such non-GAAP measures are not intended in any manner to serve as substitute for our financial results. However, we believe that they provide additional insight for better understanding of our business performance. Reconciliation between these non-GAAP measures and the most comparable related GAAP measures are included in tables that can be found in our earnings press release and in the slide presentation accompanying this call. Both can be accessed on the investor relations portion of our website at info.tas.co.il/English. Mr. Ben-Zeev, would you like to begin?
Yes, thank you. Good evening, Israel time, everyone, and thank you for joining us today. I'm very happy to host you in our earnings call. I would like to express our sincere hope that you and your families are safe and healthy. Before we discuss the results of the financial statement of TASE, I would like to address the coronavirus crisis and its effect on the Tel Aviv Stock Exchange. We are concluding a first quarter of turmoil in the local and global markets brought about by the coronavirus outbreak. The worldwide uncertainty and volatility did not skip the Israel market, bumping up the trading volumes of securities across the board. I am proud to say that even in these challenging times, our self-developed trading, clearing, and IT system prevailed. All systems at TASE remain fully operational, allowing us to provide prompt, efficient, and impeccable service. By creating a safe work environment for our employees and implementing remote work procedures, we were able to operate smoothly and without delay, all in strict compliance with the directives of the Ministry of Health. Trading volumes at TASE in the first quarter of 2020 significantly exceeded last year's daily average. In fact, in the first quarter of 2020, trading volumes on the shares market, including ETFs, were 68% higher than in 2019, reaching close to 2.2 billion shekels. Trading volumes of government bonds also skyrocketed in the first quarter of the year, reaching a daily 3.8 billion shekels, while corporate bonds, including ETFs, soared to 1.2 billion shekels a day, exceeding last year's daily volumes between 37% and 45% respectively. The overall trading volumes of shares, bonds, and T-bills total to 280 billion shekels in March 2020, compared to monthly average of 106 billion shekels in all of 2019. In the first 5 months of 2020, TASE companies raised 4.1 billion shekels in the equity market in Israel, 8% higher than parallel months of 2019, and 23 billion shekels in corporate bonds in Israel, 3% lower than parallel months of 2019. While TASE has performed well in Q1, it is too early for us to comment specifically on the impact of the coronavirus pandemic on the outlook for TASE and its customer for the remainder of the year. We believe that the opening up and restarting of the economy, along with the economic stimulus measures that will be taken by the Israeli government, will put the economy back on the path to growth. In that case, we expect to see the long-term drivers of growth in each of our business lines remain intact. And now, I would like to hand over to Mr. van der Walde, who will continue with a review of the quarterly results.
Thank you, Itai. Good evening, everyone, and thank you for joining us today. I am very pleased to participate in our earnings call. Before I begin, let me express my sincere hope that you, your colleagues, and your families are safe and healthy during these trying times. To give you an overview of the first quarter, we added slide 3, which shows a timeline of how COVID-19 affected life in Israel and the steps the Israeli government and the Central Bank of Israel took to support its economy and financial markets. Let's look at slide 5, which shows some of the key highlights of the results of the first quarter. Our revenues for the first quarter of 2020 increased by 26% compared to the first quarter of 2019 and amounted to 81.2 million shekel. Adjusted EBITDA for the first quarter of 2020 totaled 28.9 million shekel compared to 14.2 million shekel in the first quarter of 2019, an increase of 104%. Financing expenses in the first quarter of 2020 totaled 4.4 million shekel compared to the financing income of 4 million shekel in the first quarter of 2019. The transition from financial income to expenses was mainly influenced by a negative return of 2.1% from our investment in Israeli government bonds due to the impact of the COVID-19 outbreak. The adjusted net profit amounted to 10.6 million shekel, an increase of 96% compared to the corresponding quarter last year. Our financial results in this quarter show the advantage of the fact that most of our expenses are fixed. In addition, it shows the company's capacity to handle dramatic increase in our revenues without the need of substantial investments or increase in operational expenses. After going over the highlights of our financial results, let's take a deeper look at the composition of our revenues and expenses. Let's go to slide 6. Our revenues from trading and clearing commissions increased by 49% compared to the first quarter of 2019 and totaled 39.7 million shekel. The increase between the first quarter of 2020 and that of 2019 reflects the higher trading volume on TASE following the COVID-19 outbreak as described previously by Itai. The increase occurred in all our trading venues as follows: equity 83%, mutual fund 35%, corporate bonds and government bonds 42%, and derivatives 35%. Our revenues from listing fees and annual levies increased by 11% compared to the first quarter of 2019 and totaled 15 million shekel. 5% of the increase resulted from revenue recognition in respect of listing fees received in previous years. 6% of the increase resulted mainly from new services. Our revenue from clearinghouse services increased by 16%, totaling 14.4 million shekel. The increase resulted from an increase in services rendered by the clearinghouse members due to COVID-19. Our revenues from distribution of data and connectivity services remained the same compared to the corresponding quarter of 2019 and totaled 11.6 million shekel. The revenue from data distribution activity decreased as a result of efficiency measures taken by data distributors, whereas the revenue from connectivity services increased. I will now discuss our expenses in the first quarter of 2020. Please go to slide 7. In the first quarter of 2020, our adjusted expenses totaled 63.2 million shekel, compared to 61.7 million shekel in the corresponding quarter of the previous year, an increase of 2.4% year-over-year. The expenses related to employee benefits increased by 8.5% and totaled 36.4 million shekel. The growth in the expenses reflects the annual salary raise, a decrease in capitalized software development cost, and the impact of COVID-19 outbreak. Marketing expenses decreased by 62% compared to the corresponding quarter of the previous year and totaled 1.4 million shekels. The decrease is a result of the timing of marketing campaign launches. The depreciation and amortization expenses increased by 2.5% compared to the corresponding quarter of the previous year and totaled 10.9 million shekels. I would like now to review our financial position highlights. Please go to slide 8. As of March 31, 2020, our equity totaled 608 million shekels and comprises 73% of the balance sheet, excluding open derivative position balances from our clearinghouse service activity. In addition, we have approximately 339 million shekel in cash and investment in financial assets. We don't have any financial debt. We have 129 million shekel excess liquidity and 289 million shekel excess capital above the regulatory requirements. The excess liquidity decreased by 2% from the beginning of 2020. I would like now to review our cash flow highlights. Please go to slide 9. During the first quarter of 2020, the company generated free cash flow of 36 million shekels. This was as a result of our strong performance in collecting our annual levies from companies for the year 2020 during the first quarter. And with that, I will turn the call back to our moderator to conduct the Q&A.
Thank you. Ladies and gentlemen, at this time we will begin the question and answer session. If you have a question, please press star 1. If you wish to cancel your request, please press star 2. If you are using speaker equipment, kindly lift the handset before pressing the numbers. Your questions will be pulled in the order they are received. Please stand by while we pull for your questions. The first question is from Dan Fannon of Jefferies. Please go ahead.
Thank you. Good evening, gentlemen. So I guess my first question is around just kind of the outlook. And I know, Itay, you said it's hard to predict based on all the uncertainties, but I guess just thinking about your backlog, potentially for new issuance, and thinking about that both for bonds and equities, maybe talk about that with some context, and then also just the conversations around new listings and the dual listing potential opportunity. Has that changed at all? I assume it's somewhat delayed given all of the other unknowns and from a macro perspective, but just curious about some of the updates around that.
Yeah, sure. Hi, Dan. Well, with regards to debt offering, we've seen a very nice debt issuance throughout the coronavirus high volatility in our market, and we believe that we'll continue to see debt offering. Obviously, we didn't have in the last couple of months any new equity IPOs because of the situation. But given where the market is right now at the moment, and if it remains the same, I do expect that we will start to see additional equity IPOs on TASE. We had 2 at the beginning of the year, and we know that there are companies from different segments that have plans to do IPOs. This is related to what we said in the past, because we have a nice amount of companies, good companies, profitable companies that are still private in Israel. So I think that as long as the coronavirus is under control, so to speak, and this is what we are seeing at the moment in Israel, we will see during 2020 the equity IPO market coming back. With regards to dual listing, we have a company actually that announced a few days ago that they are going to dual list the shares on TASE. However, we still was not able to bring anyone from the big Israeli high-tech companies that trade mainly in the US. We continue to speak with them. Obviously, also because of the coronavirus, all of the companies were heavily focused on them running the business. I want to express what I said before during the roadshow as well, that once we'll have, the first big name that will come back, then I believe the rest will follow. I think also that the coronavirus is also something that can help our exchange with regards to privatizations. Even though, it's been the plan in the last couple of years, but now because of what's happening in the government budget, which is very similar to what we see in other countries' budget, privatization can be a good solution for inflows that the government will get. There is a new finance minister that was appointed last week. Finally we have a government after a year. So we are optimistic that we will start to see a privatization of, let's say, 25% equity that will come to our market. And also because of all the stimulants and the plan, we will see the government raising more debt over time in our exchange. So I would say that overall, being a fully vertical integrated exchange, with the derivatives that we've seen higher volumes, bonds and equity, and giving the strong fundamentals that we have in Israel, I think that we are in the right track.
Great, that's very helpful. And then just looking at, we obviously saw volumes hit multiple, multi-year highs or significant year-over-year increases across the board. Curious about the derivatives pickup, which you just mentioned. I know that is an initiative that you guys have been focused on pushing. Is that just more of the environment in terms of activity levels increasing, or are you seeing, kind of a growing user base or expansion of the product that you might, be, kind of beyond just the current volatility, that you could see that continue to grow?
Well, I think that it's more due to the volatility and what's happened in the market, and also what happened in the FX market, in the dollar shekel. So we've seen increase in the option on the exchange, because of what happened with the basis and the spreads, etc. We do see and hear more accounts, more retail accounts that are open, but they are more for traditional equities. I do believe that as time goes by and we'll see more and more activity from retail, getting more retail brokers, then some of it, will deploy also to the derivatives market. But the increase did not come from a new product that we launched. It was mainly because of the market conditions.
Understood. If you could also explain a bit the clearinghouse revenue increase, I think was ascribed to the environment, but if you could be more specific as to what actually drove the revenue increase and whether that is sustainable or that should return to a more normalized level going forward?
Hi, Dan. This is Yehuda. We can divide the clearinghouse services to two parts. One is from custodian fees for custodian, and this is and our fees is the commission is based on the value of the assets in the clearinghouse. So there we will see a fluctuation in our revenue, and from services it's for custodian and services to the members, and part of it's from the higher volumes, but we launches new services for dual companies and new companies that added during the year, like foreign ETFs that increase our revenue. So it's mixed between the fluctuation in the markets and the higher volumes and new services that we added and will follow us during the year.
And I want to add that if you look at 2017, 18, and 19, you can see that all of the or most of the non-transactional items you see increase year by year. We know very well that we cannot control the transactional revenues because no one knows what's going to be in the market, but we can control a lot of the things that are not transactional. And this is on top of all of the work that we are doing on the expense side. And Yehuda and his team are doing a tremendous job in every corner that we have in the building. And as we said in the past, we believe that our clearing and settlement services, this is a very important business line for us going forward, and we have still plenty of things to do and explore in that segment.
Great. And then just a last question for me. Some of the commissions moved around, the commission rates moved around significantly quarter over quarter. In particularly T-bills and mutual funds. I don't think you changed pricing specifically, so can you talk about the volume tiers or the caps that, resulted to maybe drive some of those changes or some of the other variables that came into play in the quarter?
Yeah, this quarter, because of the higher average transaction, we impacted by our fee schedule that we have a cap on our fee per transaction. So in mutual funds, it was the most of the impact because the fee is calculated net every day for every bank, and for that the largest transaction impact our average fee. In the other sectors, it was the impact was minor. Like in equities, it was less, and in corporate bonds there wasn't any impact, and in government bonds there was also a little bit impact because of the size of the transaction. And we also saw that, and we think what to do next with that information for the next period.
Okay. Thank you for taking all my questions.
Thank you, Dan. Good hearing from you.
If there are any additional questions, please press star 1. If you wish to cancel your request, please press star 2. Please stand by while we pull for more questions. We have a follow-up question from Dan Fannon. Please go ahead. Mr. Fannon, please go ahead.
If there's no one else asking questions, I'll ask one more. So just on expenses, obviously you guys delivered very well in terms of limited growth. You talked about the things you're doing to maintain diligence and on the expense profile. I guess just looking forward for this year, are there things that we should be thinking about that could either take the trajectory higher or lower based on what you're thinking in your budgets, as of now?
We added to the press release information about that during the second quarter. We launched marketing campaigns that the cost of them will be 2.5 to 3 million shekels. So if you look on the first quarter and you have the gap between the quarters in the expenses of marketing, it will help you with that. And in the other expenses, it's more or less that it's average. It depends on our ability to. We have a little bit slowdown in our working on development of, so the capitalization is a little bit less than the average in other periods. We think that it will be normal after we come back to our offices in the beginning of the next month.
Because of the corona, because the IT guys had to do some work to make sure that we can work, from the houses. So some of the R&D was put aside.
And we had a little bit more expenses, operation expenses during this deviation. Divided the company to two groups, and in back to normal, we think that the expenses there will be a little bit less, and in normal, as we expected that the increase between the years, it's more or less between the average that we said about the raise of between 4 to 4.5% in the annual financial statements. The other expenses a little bit influence between the quarters, and like maintenance and things like that, and sometimes but the gaps it's not so high between the quarters. And I think that's the. Do you have any other question?
No, I think that's all my questions. Oh, I guess so. Sorry, one more. The other revenue that came in lower than we were anticipating. It said in the press release that the exchange isn't renting out its facilities to third parties. Is that? I assume that's still the case, but as we think about maybe a couple quarters out, would that be revenue you think would return, or is this something that's more permanent?
We think that the restriction will remain for months or something like that, but to build again the backlog of invitation to the center, it will take time, and we think that back to normal it will be in the fourth quarter. But it's a minor income for us, and it supports our marketing. We use this center for companies, for public companies and analysts and the media to support the markets, our markets, and that it's much more important than the income in this line.
Yeah, and I want to add then that it's a minor income, but it's also a minor expense, because when we run it with all the events, obviously we have to pay in most cases, mainly in events that are in the afternoon, in the evening, extra hours for the employees. So it's not, there's also some positive impact for that.
Understood. Okay, thank you very much.
Thank you very much, Dan.
There are no further questions at this time. Mr. Ben-Zeev and Mr. Van de Velde, would you like to make your concluding statement?
No, thank you.
Thank you. This concludes the Tel Aviv Stock Exchange Q1 2020 results conference call. Thank you for your participation. You may go ahead and disconnect.